Hello traders, here Chris Capri, secondskiesforex.com, where we change the way you think, trade, and perform. In this next video for your course here, we are going to be giving an introduction to the Forex market and talking about the advantages and trading sessions of the FX market. We're doing the goal of this video is really to give you kind of a 10,000 foot view of the market, how it operates, why it's different from other markets such as the stock markets or the futures markets, and some of the advantages that are inherently a part of the FX market that make it very advantageous for you. So let's jump into this. Okay, so there are many names for the Forex market. Sometimes it's just called the FX market, the foreign currency market, foreign exchange currency market, currency market. These are all synonymous for the Forex market. So if you see these, don't be confused. They're not different markets. It's just one particular market. Now, many of you don't know this, but there was actually no retail trading before the late 90s. In fact, one of the first brokers to come out was State Street that offered retail Forex trading. And the reason being is that Forex trading was only done institutionally because to make any sort of money, you had to be trading large quantities of currency to make profit from it. And so what happened is that brokers had realized that this was a market that was not available to retail, and they were able to set up structures to where they could offer a fair amount of leverage so that people were trading currency sizes large enough to make money. So State Street in New York was one of the first, then FXCM became one of the first major retail brokerages out there. And they were actually the five people who started FXCM were actually employees of State Street. So FX trading for retail traders is something relatively new. That's why this is still a market that people are learning to invest and to trade and to profit from, because it's still new. Where stocks have been around for over a century, same with commodities, FX trading is somewhat new. So the market is still building in terms of exposure, development, knowledge base, and approach. Now, in terms of size of the market, there is no market that's larger than the FX market. BIS, the Bank of International Settlements, which is like the central bank, it's the central bank for all central banks. They do a report, and in April 2016, they had noted it was $5.1 trillion in transactional flow per day. $5.1 trillion market per day. It's probably now more like 5.4, 5.5. So it's incredibly huge. To put it in perspective, the U.S. stock market is only, 100 plus, a few $100 billion, whereas the Forex market is hundreds of times more than that. So, you could take many markets, roll them up, and they still wouldn't have as much. They still wouldn't be the same size as the FX market. So this is a massive advantage to you, which we're going to be explaining a little further. Now, unlike stock exchanges, like say the NASDAQ is a stock exchange that has particular stocks that are traded through that exchange. And that means that if I want to make a trade on a stock in the NASDAQ, I'm going to have to do that through the NASDAQ or an exchange that will trade through the NASDAQ. So that's a centralized market. That means there's one exchange where they kind of house or own or operate the transactional flow that is going through their particular stocks. That's centralized. And the FX market is different. It's decentralized. Why? Because its currencies they're across 160 plus countries, so you can't centralize it through 160 countries. There's no way you could create a structure that would be able to take all the transactional flow from all the countries and centralize it. And so to make it more efficient, they decentralized it across the interbank market. And you don't really need to know this, but the interbank market, there are two main large players in the interbank market. That's EBS and Reuters, and they are responsible for the pretty much 90% of all currency flow on the planet. And then they work with the interbank market, which is 12 or 13 of the largest banks who are moving most of the currency. And so they decentralized it because they realized it'd be more efficient for a global presence. And that being decentralized has advantages and disadvantages, which we will talk about later. There are generally considered to be three major trading sessions we're going to talk about, not in the next slide, but the slide after this. which is also unique and an advantage because in a stock market, you really only have that one session that stock market is open. For example, in the US, you have it in the morning in New York and it goes until 5 p.m. or 4:30 p.m. in the afternoon. But then it's closed. Whereas the FX market has continuous trading session. One trading session overlaps the other and overlaps the other, so you can keep trading. You don't have to worry about the market closing or not being able to make trades in the stock. You can make trades in the stock 24 hours a day because there are 3 major sessions that you can trade through. So this is a huge advantage for you as an aspiring trader. Getting into some of the advantages, because it's such a large market, it's highly liquid. Highly liquid means that there's more available of that particular currency for you to trade. And when you have more availability of a particular instrument that you want to trade, you get better pricing, you have lower spreads, you have also quicker transactions because of that. So this is a massive advantage for you, is the liquidity available in the FX market. You get leverage up to 500 to 1. In Europe, they have the ESMA rules, which only allow up to 31, but other countries will allow up to 500 to 1. And unlike certain stocks and ETFs, there's certain stocks and ETFs you can only buy, you cannot sell them. FX market is not like that. If you think the euro or the pound is going to go up in value, you can buy it. And if you think it's going down in value, you can sell it. So you can profit from both directions. This kind of structure makes it much easier for you to profit in both rising and falling markets. Instead of just having to be long only or only buy stocks, you have the option to buy and sell currencies. So this flexibility is a huge advantage for you. There's also, you can get an additional income via carry trades. So what a carry trade is that when you are buying a currency, you're buying a currency in relationship to another currency. I can't buy the euro against the euro and expect to profit from it, but I can buy the euro against the US dollar if I expect the euro to gain in value versus the US dollar, and I can profit from that. Now, when you buy a particular currency, what's happening is that I am buying one currency against the other. Every country has a central bank. Every country of the currency has a central bank which sets the benchmark interest rate for that particular country. And you can look up those. DailyFX has a great list of the different rates for the different countries. But if I am buying a currency that has a higher interest rate than the currency I'm selling it against, then what I'm doing is creating a carry trade. And a carry trade is anytime I hold a position past 5 p.m. New York time, that position has to be rolled over the next day into the next trade. The technical way to explain this is if I have money in a bank and that money is in a savings account at the end of that day, then I collect interest for that day. Carry trades are the same thing. If I buy a currency with an interest rate higher than the one I'm selling it against, then I'm gaining that interest income per day that I hold that trade. Hence the name carry trades. I'm carrying them over and I'm collecting interest along the way. So it's a way for you to make 2 incomes in trading. You can make an income from the direction of the trade. So if I think the euro is going to rise versus the US dollar, and it does, I profit from that increase in direction. But then if there's also a positive carry or interest rate in my favor, I benefit from that as well. So you have a chance to make 2 incomes. The market is also open 24/5, Sunday at 5 p.m. Eastern to Friday at 5 p.m. Eastern. The U.S. stock market doesn't open until Monday morning, so you can actually make money before the U.S. stock market is even open. This is a massive advantage. Most stock markets are only open 5 days a week, Monday through Friday. And so with the currency market, because while here in the U.S. or in North America or in Europe, it may still be our daytime Sunday, it's Monday morning in Asia. And so the currency market's already flowing at that time. So you have a chance to be making money not only more often, but you also have a chance to be making money while you're sleeping. Stock markets, you can't make money while you're sleeping. Once the exchange closes, that's it. But with the FX market, it's open 24 hours a day, so you can make money while you're sleeping. And this is a massive advantage because if I work a job, I'm only making money while I'm at that job or doing the work of that job. I don't make money while I'm sleeping. But with trading, the FX market, you can make money while you're sleeping. If the currency you buy or sell is going in the direction that you speculated that it would, you make a profit from that while the movements are happening while you're sleeping. So huge advantage for you here. Okay, let's talk about trading sessions here. So I said there are 3 major trading sessions. I am going to list 4 here just to kind of give you a little additional information. But I want to talk about the trading sessions and the currencies that are moving more often during those trading sessions. So the first one is New York. And in terms of Eastern Standard Time, that's the times we're using here. That's 8 a.m. to 5 p.m. New York time. The major currencies moving during that time are the US dollar, Canadian dollar, and the Mexican peso. The reason why I'm mentioning this is there are going to be currencies which are going to move more dominantly during particular trading sessions and less dominantly in other sessions. And that just has to do with people in their geographical location are more familiar with currencies and investments that are available during their waking hours. And so, the Canadian dollar is heavily traded in the US session, but there's not really a whole lot of transactional flow going between Canada and Asian countries. So what this ends up translating to is you're going to have more movements and more volatility in the Canadian dollar during the New York session than you will in the Asian session. Same for the Mexican peso. So it's important to understand trading sessions, not only in terms of times, but that currency flows and transactional flows are going to be different as we progress through those trading sessions. The London session is 3 a.m. New York time to 11 a.m. and the major movers during that are the euro, the pound, and the Swiss franc. So if you're in Europe and you want to be trading European currencies, the best times for you to be trading them is going to be during the London session, which, as you can see, overlaps 3 hours into the New York session. We have the Tokyo session, which is 7 p.m. New York time to 4 a.m. New York time. So it also, the end of the Tokyo session, as you can see, overlaps with the Open of London. And the main currencies that are being traded during that time are the Japanese yen, the Hong Kong dollar, and the Chinese yuan. Now, even though these are the 3 main sessions, there are, what you would call ancillary markets or ancillary sessions to say. And Sydney is one of them, the Australian dollar, the New Zealand dollar, and Japanese yen. So you can see that this one opens when New York closes. And so that's the major session right there. If you're trading the Australian dollar or New Zealand dollar, that's when you're going to start seeing the beginning of the flows really pick up for the Australian and Kiwi dollar. So it's important to understand, the main lesson here is just to understand that different currencies become more active or less active depending upon the session that you are in. And that's pretty much it for this video. So I hope it gives you kind of an overview of the FX market, some of the advantages of it versus a stock market or a futures market, which is only open during limited times. The fact that you have 24 hours a day, 5 days a week to trade the currency market. You can make money while you're sleeping. It's a massive advantage. There's greater liquidity, and you have the opportunity to trade at all times of the day, Sunday through Friday. So massive advantages in terms of trading the Forex market. It's important to understand the different trading sessions and really just kind of understand how the Forex market works as a whole. So with that being said, I hope you enjoyed this video, and I will see you in the next video.